So the reason your financial advisor doesn't want you to see this video is because I'm going to give you a very simple and straightforward approach that can make you a millionaire, and you're not going to have to pay any kind of ridiculous fees in order to achieve it. So let's say you start with a $10,000 initial investment. So I just talked to a friend the other day, and he told me that he just got finished sitting with an advisor, and they were going to charge 6% upfront as a load fee or sales fee. And this is basically coming right off the top. And if you know how the math works, if you lose 6%, you actually need more than 6% just to get back to your starting point because your base has now been reduced. So before even getting started, he's went to a financial advisor and they've basically lowered his base starting point, and now he's got to start and recover almost a year of performance in the market at like a normal 8% return just to get back to even or a little bit beyond even. So your financial advisor is supposed to be someone who's going to help you reach your financial goals. So I'm not saying out there that all financial advisors are bad, but some of you might need to consider firing your advisor if they're not giving you any real benefit and they're just charging you these ridiculous fees and not helping you save for retirement. So let's assume that you make 8% per year and you're using your advisor, and then I'll go through a different method that I would use that you can do a do-it-yourself investing and get better results. So the fee that I'm talking about is a $4 fee. There's a Vanguard ETF, a Vanguard Growth ETF, which I've drawn down here, which is essentially like owning a basket of 300 different US growth stocks. And the fee is only $4 per 10,000. And you don't pay it up front. It's an annual expense. And it's one of the cheapest and best ways to buy growth. And here's the 5-year, 10-year, and 15-year performance of the Vanguard Growth ETF. And I don't know that your advisor, while charging you a fee, is even going to match this $4 per $10,000 performance of this vehicle, which is ticker VUG. So in this scenario, you'd have to take the $4 out. And if we compare this 10,796, which would be my proposal, versus what a typical advisor might get you, you're already ahead by $644 in the first year alone, just by not paying very high fees for basically, not a lot of work. It's just a sales fee to get you as another client. And then when they put you into their instruments, they probably won't put you into an instrument like Vanguard Growth ETF, which is a passively managed, basket of growth stocks. They'll probably give you one of their mutual funds, which is going to have a higher expense than $4 per 10,000. So not only would you avoid the 6% load fee off the top, you'd also be paying much higher expenses per year. So you need to look at your advisor, look at what return you're getting, and then consider simply buying VUG, or there's another option, which is just owning the S&P 500, which is the ticker SPY. And you might be doing much better than on your own than getting an advisor. An advisor will give you kind of a cookie cutter split of how to divide up your assets and what to invest in. But in reality, if you're, like our target audience in this, our YouTube channel here, which is typically 25 to 35, you've got 30 to 40 years before you're going to retire. So you have a long time horizon for your money to grow. So you don't really need to have a heavy asset allocation in bonds, for example. You can have much more stocks, and once you advance and once you get more of a complicated tax situation, it might make sense to have an advisor from a tax purpose. Now in a future video, I'm going to go through a few very basic tax concepts, which include the benefits of a Roth IRA versus a 401k. And also, to get started, two brokerages that I use and that I would recommend. And I recommend them not because I work for them or I'm paid by them, but they're very simple and straightforward, and they're best in class in the business. They've got the lowest fees, and I think for the average investor, going with Vanguard or Fidelity is probably a great starting point to open up an account in a Roth IRA. You can get just a Roth IRA or just a 401k, or you can do both. I have both of these instruments, and like I said, in a future video, I'm going to walk you through the benefits of each. So stay tuned to the next video. I hope you learned something here, and remember to check your advisor, check your return, check the fee that you're paying, and consider all of your options, and if do-it-yourself investing works for you.